Hello traders, and welcome to the second video within the section of structure. Now in this particular video we're going to be further discussing structure, right? Just as expected, this is the structure section, so this is all going to be revolving around structure. However, I want to make very clear that structure alone will never tell you when to buy and when to sell, right? And for that reason is why we have all these different sections, right? Structure alone should not be used as a confirmation to buy or sell a market. However, structure can very well assist you with your bias or potential market direction, right? It sort of gives you a sense of where we're potentially heading, what lows are we expecting to be protected, what highs are we expecting to be protected, that sort of stuff. However, it will never tell you when to buy and when to sell. Now, with that out of the way, let's get back to the drawing board and let's continue discussing structure. So we're back here and we're going to be discussing structure again. However, this time we're going to be taking a look into what I briefly touched on the previous video, and this is what I call the retracement structure confirmation, right? I briefly said in the previous video that in order to have a confirmed, and this is important, to have a confirmed structure point that then goes ahead and breaks structure higher, it needs to at least have a 50% retracement of the structure, right? If it does not, then it's not considered a valid structure point, even if it then goes ahead and breaks structure higher, just like it does in this case, right? Now, this case right here, I believe it's a 50% retracement, so this would be absolutely valid, right? And it actually breaks structure, so it's valid. However, when you have a scenario where you push up, you barely wick down, and then continue higher, this right here should not be considered a protected higher low, because it's very close to the actual expansion, to where the actual expansion finishes, and with probability that can easily get taken out, right? It can easily get taken out. We can easily return and make a structure point somewhere over here, right? Lower than the 50%. And then if you then break structure, then that is going to be a valid structure point at this point, right? So it's really kind of subjective, but as a rule of thumb, and what I usually preach and teach, is that you at least want to see a 50% retracement of the leg in order to consider the structure point that then breaks higher a valid structure point. Otherwise, it can very well be seen as liquidity right here and can get easily taken out. But now don't confuse yourself with liquidity. That's another section. So what I wanted to talk about in this video is mainly the fractal nature of the market and structure. And this is actually where some traders do go wrong. So I want to make this as clear and easy to understand as possible. So when we're talking about the fractal nature of the market, what I really want you to pay attention to and what I want you to understand is that the market is fractal, right? Every structure play that you can possibly find on a daily is easily replicated within a 1 minute, a 5 minute, a 15 minute, and really all across the different time frames, right? Because the market has a number of patterns that it repeats with different variables, but it really repeats. So what you need to understand is that depending on the time frame that you're using to determine your structure, it's really going to vary. So if we go back to the charts, and as you see, we're looking at GU, and if we go back to an 8-hour time frame, let me actually go slightly lower, a 30-minute time frame will show you a different structural play than the 12-hour, right? If we look here, and this is the time frame that we actually use to determine the structure, and this structural play is actually valid. However, if you want to use lower time frames, well, then that's absolutely fine, right? You can say to yourself, hey, this is my 30-minute time frame, this is my recent price action, and this is what I see in regards to structure, right? So I see a low, I see a high, I see a retracement that is well over the 50%. So now once we break this high, I can then expect a bullish continuation, right? we do that, we break the high, we retrace, and as you can see, it works perfectly, right? We retrace down and make a new high. This really means that it doesn't really matter the time frame that you use, right? But as a general rule of thumb, and what I usually suggest is you use higher time frames because those have more orders and information within the candles themselves as they take longer to build. So, however, right, and this is important, if you want to be the type of guy that uses the 30-minute structure, right, and then looks for entries on a potential even lower time frame, on a 5-minute time frame, then that's absolutely valid. It's go as long as you manage properly, as long as you risk properly and you secure yourself at a given amount of pips or know when to take profits and that sort of stuff, it's going to work out perfectly for you. You need to find what works for you, right? But just for me and the way that I trade and my personality, I really like the higher time frames because of that factor that the orders, the candles have more orders in them and they are high probability. However, 30-minute can work perfectly well, right? And now we're going to be taking a look into this particular scenario and how this works within the actual drawing board. So let me actually go back, let me remove the stuff, and let's now actually take a look at the fractal nature of the market, right? And in order to explain this, I'm going to be drawing different time frames and different structural points so that you can understand how really everything is fractal and that every structural play can work. It's just about putting the story together and multiple time frames in confluence, right? So let's say that this blue structure right here is your 4-hour time frame, and as we can see, that 4-hour time frame in this case is clearly bullish. So let's do that. 4-hour time frame is this blue structure play right here, and it's clearly bullish. Now you may be asking yourself, well, how would the 15-minute time frame inside this 4-hour structure look like? And this is what we're going to be discussing now. And now you're going to really see how the fractal nature of the market really works. So if we use a different color, we're going to say that this is our 15-minute time frame. Let me go ahead and draw it out, right? So what you will find is that the 15-minute time frame, right, could potentially be doing something like this. You will see that price is easily trending up, right? And if we look just at this section right here, we can see that there are structural plays that really do work, right? We have a low, we have a high, we identify this is our higher low, and this is now our high high, and now we have a bullish trend occurring within the 4-hour bullish expansion, right? Within a impulse in the 4-hour, you have an entire bullish trend occurring right here. So what this really gets to say is that the time frame that you use really doesn't matter as long as you understand the overall higher structural play, right? So let me first get rid of this, and we're going to be talking about that. So as you can see, we have a absolutely valid bullish structure within the 4-hour impulse, right? We can see that price is overall making higher highs and higher lows, and is absolutely respecting the trend, and there's multiple ways to get involved in this market and actually profit. But for that, you're going to need all the rest of the tools, and for now we're just focusing on structure, right? So we understand that if you know where the higher time frame is, right, and where we're in terms of expansion and retracement, you can then make the lower time frame work. This case, the 15-minute. But what you will find is that once the higher time frame impulse is done, you're going to have a heavy bearish trend all the way down until that higher time frame retracement finishes and the higher time frame expansion resumes the trend, right? And we're going to be taking a look at this point right here. So we see that we had a bullish structure within the 15-minute pushing up, and now we are potentially starting to shift, right? Following the rule of 4, right now we're actually bearish, and you can take sales and really make money selling. But this gets to say that if you want to be doing this, you want to be paying attention to where the higher time frame actually is, and if you have room or not to catch those trades, right? Because the 15-minute time frame is going to keep trending down until we make that higher time frame structural point, right? This right here, this leg down represents this, and you're then going at some point going to shift right here and continue with the overall trend. And this is really where you want to jump in. You can, I mean, I wouldn't suggest it, but you can really take those cells down if you know you're playing the retracement. But I would highly suggest you try to stick with the higher time frame and the higher time frame impulses as much as possible. It's just going to be beneficial for you. So let's continue. Again, this is our expectation. We understand that we're shifting bullish back again, and now we can continue make money buying the market, right? Because structurally we're bullish right here, and the higher time frame is now expanding higher. So this is really how the, I'm sorry for my bad drawing, but it's kind of difficult. So you should, again, should be fine, I believe. So this is now our potential shift once again. And this is going to be happening back and forth, right? Until the, let me get rid of some of this stuff, until the higher time frame decides to shift and we start really delivering price in a different direction, right? We could then potentially break structure right here, right? Make a new low, confirm the bullish, the bearish trend. And now the game would be just the other way around, right? Now you would try to catch those positions within the, let me get red back again. You would try to get those positions within the bearish expansions lower, right? Because the lower time frame is going to be following up what the higher time frame is doing, right? And that's essentially how the market moves and how the waves really work, and how the fractal nature of the market really behaves. Now, the 15-minute time frame, right? If we now look and we say that, hey, this is our 15-minute structure. Well, within a 5-minute structure, right? If we say now that 5-minute time frame is also something we're looking at, then the same thing is going to be happening over here, right? It's just going to be happening faster as we're going to be doing it in the 5-minute time frame, and it's going to be pushing up. Then the 15-minute is going to retrace, right? And that would mean that the 5-minute will shift, right, until the 15-minute retracement is done, and then you're going to continue, right? This just gets to say that the market is fractal. The time frames do not really matter. It's just about putting the different time frames together and knowing where you are within the higher time frame. That's the key thing here. You want to know wherever you use a 4-hour as your higher time frame, or a daily, or a 8-hour. It really doesn't matter. But you really want to know what your higher time frame is, right? What is the higher time frame that I'm looking at? And how am I going to play those structural plays within lower time frames, right? If you're using a 4-hour, you can very well use the 15-minute for your structural plays and that sort of stuff, right? If you use a weekly, you can be looking at the daily for the structural shifts back and forth within the weekly expansions and retracements. So that is how the fractal nature of the market really looks like, right? And I really hope I made this understandable for each and every single one of you. It's kind of a hard topic to explain, but I think this should be very clear now, right? The main takeaway here is whether you use the 10-minute, whether you use the 1-hour or the daily, it doesn't really matter, right? As long as you know where you are in your structure within the time frames that you choose to trade, you're going to be good, especially if you're going to be using the tools that you're going to learn throughout the different sections, right? So if you want to be the type of trader, right? And let's choose green right here. If you want to be the type of trader that is looking at a 5-minute structure, right? And you say to yourself, okay, we're bullish on the 5-minute. We made a new high. We might start retracing, which would mean that the 1-minute or even lower, the 30-second, right? Let's use purple, is going to shift bearish at this point, and I'm going to wait for the retracement to finish, right? Once that is done and the trend flips back bullish, I'm going to continue with the 5-minute trend that is clearly bullish in this case. And you do that, you can have great success doing so, because the fractal nature of the market works, and it's how price delivers. Everything is fractal, and each and every single time frame will have a different structural play. And as long as you choose the right moments to execute and the right ideas, meaning you know where you are retracing, you know when you are expanding higher, then you can do this and make it work, right? Maybe you like to be in and out of the market in a matter of minutes, then you can do this exercise, right? However, as I said before, higher time frames always prevail. So always keep an eye on what the daily may look like, right? Because even though this is a 5-minute and the 5-minute is pushing up, right? You can still very well be in a daily retracement, and that's going to be dangerous. Or you could be in a daily expansion, and these buys right here are going to be great because they're going to run a long way, right? Because you're going with the overall daily time frame. So that's really it in regards to the fractal nature of the market, right? We're going to be going back to the charts, and I'm going to try to explain that to you in the charts, because it's going to look a little bit differently, but it's essentially the same concept. So let me pause the video for a second. I'm going to remove some stuff on the charts, and we're going to be taking a look at the fractal nature of the market over there. So traders, we're finally on the charts, and we're going to be translating what we've learned about the fractal nature of the market into actual candles, so that you can get an idea of what we're actually looking at and what we're actually trying to understand here. So I chose a slightly lower time frame in this case because I really want to illustrate how this really works on each and every single time frame due to the fractal nature of the market. So we're looking at GJ on the 1 hour. And if we look closely, we can see that right at this point, we have a bearish trend established, right? We can clearly see we have our rule of 4 met, and now we're pushing bearish. Right at this point, we make a new low, right? So the expectation is that we're going to get a retracement, right? Somewhere over here, and we should continue delivering lower, right? Whether that retracement stops here or that retracement pushes a bit higher and then drops. As long as we protect this high, we're good for sales in this case, right? So if you want to be the type of trader that you say to yourself, hey, I understand the 1 hour is bearish, we just made a low, so with probability we're going to get a retracement, and this is something that I'm going to try and play, right? So if we go slightly lower, we go 5 minutes, we can clearly see our 1 hour swing points over here, right? Over here, 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 and here. And as you can see, in order to make that 1 hour retracement, right, which this impulse right here is just a 1 hour retracement, nothing more, nothing less, right? So we see that this is a we're playing the 1 hour retracement, and as you can see, the 5 minute actually has to shift and puts bullish and valid structure into play, right? We clearly see that in order to make that 1 hour retracement, right, we're just looking at a retracement for bearish continuation, we actually have to entirely shift the 5 minute and put in bullish structure. So this really gets to show that the fractal nature of the market really works. So if we keep watching, right, we keep watching this, and now we should expect a lower high anywhere in this region to continue lower. However, if we look closely, we can see that this fails, right? If we look right, we see that we actually end up pushing higher and breaking above here, and that is probably because there is a higher time frame in play, and that's why I always suggest that you use higher time frames and keep the higher time frames in mind. So if we look, for example, in a 4 hour, yeah, we can clearly see why that happens, right? Why we actually buy up here and continue higher. Well, we were actually bullish on the 4 hours, so this 1 hour internal bearish trend that we had happening over here, which is absolutely valid as a trend and a bearish trend, was just the 4 hour retracement that then went ahead, and once the retracement was done, we continued pushing higher. So this really gets to show how the fractal nature of the market really works, and this is going to be crucial, right? So now we see that the 4 hour shifted bullish. That means that once the new high is established, which we have right here, the 1 hour is going to shift bearish, which we can see with these points right here. And that also means that the 5 minute is going to be extremely bearish on the way down, right? And for a long period of time. So then, right, what happens here is that the 4-hour retracement finishes right here, right? We return and we establish a potential new structure point, and that means that the 5 minute is going to shift. And if we go slightly higher, maybe even the 15, and we actually look here and choose a different color just to make everything kind of better for you guys to see, maybe blue, yeah, that works. And we remove some of this stuff and this stuff. We can clearly see that the 15 minute also shifts back bullish, right? So what you need to understand is that if you have the 4 hour as your higher time frame, well, the sequence is going to look something like this, right? You're going to have the 1 minute shift once. So what I mean here is that if you have a bullish trend on the 4 hour and you're in a retracement currently, right? Because you just made a new high. Well, the 1 minute is the first time frame that is going to shift bearish, and that is going to shift the 5 minute. Then that is going to shift the 15 minute, the 30 minute, and so on and so forth, right? It's like a snowball effect. Once you get your higher time frame structure point, that is then going to shift the lower time frames below that to continue in that given direction that the higher time frame is actually aiming for. So that is going to be it for this video in regards to structure. Again, don't get confused. We've got tons of content on the way. You've got different sections, and really structure is just an idea to guide your eyes and to know where you're potentially heading and what you can expect. But it's nowhere near close everything you need to know to execute in the markets. So don't get stressed. Do not overthink stuff. Really, the main takeaways here are the followings, right? You want to remember that in order to establish a valid structure point, it needs to have a 50% retracement or more, right? That is then going to serve you as a great structure point if it then actually goes ahead and breaks structure higher. If it does not, and if it actually does something like this, where it barely wicks down and then continues higher, right? Then you're not going to be seeing this as a structure point, because that's easily going to get taken out into the real structure point that will happen somewhere below the 50%, and then it's going to resume higher, right? So this little hiccup would look something like this in terms of candles, right? You would probably have your bullish candles pushing up, right? We can clearly see this is a bullish, and then all of a sudden you're going to have a small bearish candle like this. Let's imagine this is your bearish candle, and then the next candle just continues higher, right? And this should really not be considered your structure point, because you really want that 50% retracement or more to then safely say that, hey, we've now pushed up, we've retraced, and we actually went ahead and broke higher. So this is now my valid structure point, and we should not get below this point if you want to continue pushing up. So yeah, that is it for this video, guys. Stay tuned and really rewatch if needed. Take notes. It's essential, guys. I cannot stress this enough. You need to take notes. Take all the notes and continue slowly but surely with the content. I see you guys in the next video.